All right, let's get going. Numbers have calmed down. So, just again, those of you that have just joined, if you have any questions as we go, down at the bottom of the screen, there is a Q&A box. You can click on that and type your questions as we go. I'll answer them in the relevant part, or as we go along. Okay, so good morning. For those of you that have joined one of these before, welcome back. For those of you that haven't, welcome. So what we will do today we'll spend a little bit longer going through this announcement around the registration fine that got, or the fine waiver that got announced. We'll talk you through the deadlines for that. Outside of that, it'll be going over a lot of the same stuff that we've covered before. So just making sure people understand the requirements, the deadlines, and obviously whether or not you'll be paying any tax. We'll cover the fine waiver part first, because after we've covered that part, we'll sort of go into what we've covered in the previous one. So those of you that are just joining for the information on the fine waiver, we'll get through that early in the piece, and then you're obviously welcome to stick around, or you can drop off after that if you want. So again, pop your questions in as we go. Okay, I am going to share my screen. Give me one moment. There we go. Okay. So look, just a reminder on what we'll sort of cover today. Obviously, I've talked about the waiver announcement. We can go through a little bit more on the qualifying activity, so the free zone exemption. Still doesn't seem to be a really good understanding of that around the market, so we can spend a little bit of time with that, but we'll cover the sort of the basics and then this fine waiver first of all. And yeah, again, just a reminder to please add your questions as we go using that Q&A box. You can just type in your question, and we'll answer it as we go through the presentation. Okay. So just a reminder, very basic thing, which is that every company is subject to corporate tax, to the compliance steps. All right. Remember, not every company will have to pay tax. In fact, most small businesses won't have to pay tax. But paying tax and being compliant with corporate tax are two very different things. All right. So the main point of difference here is that every single company needs to comply with corporate tax, regardless of whether they will be paying tax or not. So it doesn't matter how small you are. It doesn't matter how recently you've opened. It doesn't matter if you've got no revenue or if you haven't got a bank account. None of that stuff matters. You have to go through the compliance steps and prove that you don't have to pay tax. Okay, I still get clients coming to me saying, I thought I didn't have to do anything because I was under the threshold or something like that. Right. So every single company needs to go through the compliance steps. There is a special rule for freelancers, so natural persons, which have a slightly different set of rules. But if you're a freelancer, you don't have a company, it's not a company. So these rules apply to every single company. Okay, straight into the most interesting, or the biggest announcement that we've had recently, which is around the fine waiver. So reminder that every single company obviously has to be registered for corporate tax, also have to do accounting and file a tax return. But for the registration, okay, every company has to be registered within 90 days of establishment, okay? Obviously, if you have had a company for longer than that, so, many clients who have had companies for a couple of years, right? If you missed your deadline, which was last year, or if you've just recently opened your company this year and you missed that 90-day deadline, or sorry, you opened the company last year or this year and you missed that 90-day deadline, and you've been hit with that 10,000 dirham fine, or if you are sitting there and you have not done anything for corporate tax, right, you are probably sitting on that fine and you are not aware of it, okay? So in both cases, right, if you have received that fine or you are going to receive that fine and you just don't know it yet, you now have a small window to get that fine waived, okay? This is a very, I would say, limited opportunity from the Federal Tax Authority. They are using this waiver as a, think of it as an instrument to get people to file early. So I'll go through the deadlines and the waiver deadlines in a second, but the main thing here is that, you know, yes, if you've already received that fine, this, you know, you'll be very aware of this. I also want to make sure that if you are sitting there and you haven't done anything for corporate tax yet, right? So you haven't registered, or you've sat there thinking you're under the threshold, so you didn't have to do anything. The likelihood is that you will be sitting on this fine and you're just not aware of it yet. So you need to sort of take this out. This is your one opportunity to, you know, take action and make sure that you don't get hit with that fine if you're sitting there and haven't done anything yet. For those of you that have already received the fine, you know, let's go through what you need to do. So the general rule, or the rule is described as you must file your first tax return within 7 months of the end of your tax year, which basically means you need to file it 2 months early. Okay. What we'll talk through is the standard tax year, which is January to December. Okay. But obviously, if you have a different financial year, then the rule sort of applies that you need to file your return 2 months early. So let's go through how the first tax year works, right? So the first we need to actually explain how to get the waiver. First, you need to be aware of what your first financial year is, or your first taxable financial year is. And it all depends on when you actually opened your company, okay? So I know that this will seem a little bit complex, all right? But it actually, you know, people will fall into one of a few buckets, okay? And depending on when you opened your company will depend on when your first filing is, okay? Now, again, I'm doing this on the basis that everyone has a standard financial year, which is January to December. Generally speaking, if you've never changed your financial year and you're just registered in the standard free zone or on the mainland, right, then your financial year just runs January to December, unless you've gone and changed that by a director's resolution or something. Okay, so if you're sitting there and you're not sure, the likelihood is that you've just got a standard tax year or standard financial year, which is January to December. The only difference here is if you have a Dubai World Trade Center license, so if you're registered in DWTC, your rules are different. You follow a different financial year depending on when you founded your business, but that's just DWTC. So if you're a Dubai World Trade Center company and you're not aware of your financial year, please reach out to us and we can help you out. But from here on in, I'm just going to talk to the standard financial year. So standard financial year in the UAE is January to December. So that means that is your standard reporting year. And so the question is, okay, which financial year is your first taxable financial year? And that is where we look at when you actually open the company. Okay. So the largest bucket of clients is if you opened your company prior to June 2023. So if your company was opened in May 2023 or earlier, right? So let's say you opened it in 2007, or you opened it in 2018, or you opened it in February 2023, or even May 2023. any time before June 2023, right? Your first tax year was last year, January to December 2024, okay? Most people are in this boat. Most people, have had their company for a few years. And, so 2024, January 1st to December 31st was their first taxable financial year, okay? What this means for your deadline, your filing deadline is September this year, September 2025. And if you missed your deadline or you haven't registered yet, okay, to waive that 10,000 dirham fine, you need to file your tax return by the end of July, okay? I would not suggest waiting until July to do this, okay? I've still got clients who have been waiting until, closer to the deadline for no reason other than, they just want to wait and see. I still don't understand why people delay this when everything's ready, but anyway, you should, to get this fine waived, you have to have it filed, your first tax return filed by July, okay? Please don't wait until July, please, because it's just going to be a scramble. You're going to be, chasing down documents, things like that. If you have not done anything for corporate tax yet, you've got a month and a half, no, 2.5 months, sorry, to get everything sorted and filed without getting fined. Okay. If the next group is if you opened your company between July 2023 to June 2024. So the second half of 2023 or the first half of 2024. All right. Your first tax year, your first taxable financial year, will run from whenever you opened the company, okay, up until the end of December last year, so December 2024. Basically, you run the remainder of 2023 and then all of 2024, okay? You don't need to worry about that too much. You just need to know when you opened your company, right? And if it was in that window between July 2023 and June 2024, that means your first taxable financial year ended December 2024, and you've got the same filing deadline as those who opened before June 2023. I know this doesn't seem like it has any rhyme or reason, jumping around, skipping June 2023, but this is the way the law is written. So you just need to look at when you opened your company, okay? And that's the one that you fall into. You've got the same filing deadline, right? So September 2025. So if you need to get that fine waived, you need to file same deadline by July 2025. Okay. I've got a few people asking the specifics on their setup, which is fine. I'll answer those individually because I'm happy to go through a few examples. Okay. Yeah, so please send in your questions as we go, and I'll answer them as we go. Okay, this next one. So looking at the top half of this slide, this is a very common question that we're getting, right? So people who have just recently opened their company. So if you opened in the second half of last year or have just opened this year, your first taxable period runs all the way through to December this year. Okay, so that means your deadline, because your first tax period finishes at the end of this year, right? That means that your filing deadline is September 2026, so September next year. So using the same deadline, right, you have to file by the end of July 2026. Now, what that means is that if you have already paid the fine or if you've already incurred the fine, okay, obviously you cannot file your tax return until your financial period has ended. Okay, so you can't go and file your tax return now if you're in this bucket. But as long as you file it within by July 2026, so between January and July 2026, you can get that fine waived. So just a reminder, this is just for companies that have opened, July 2024 or later. So second half of last year or this year. If you've received that fine, you can't file your tax return yet because your first tax period still runs until December 2025. Once you get into January 2026, go and file your tax return before July, and you can get that fine waived. So we'll just quickly recap before we go to the unlucky group. So reminder, if you had your company already open by the first half of last year, before June 2023, right? Your first tax period is 2024. You've got a September filing deadline, but you need to file by July this year to waive the fine. If you opened in July 2023 up until June 2024, right? So second half of 2023 or first half of 2024, you've got a longer tax period, but it still ends in December 2024. So you've got the same filing deadline. Then if you've opened your company more recently, right? So second half of last year, July 2024 onwards, your first tax period runs all the way to the end of this year, 2025, and then you need to file it by July 2026 to get it waived. Okay. Now I just want to talk to the unlucky ones. I call them the unlucky ones because the way that the law was written was that if you opened your company within the month of June 2023, okay? If you opened your company in June 2023, we call them unlucky, unfortunately, because that means you had a filing deadline or you had a first tax period which finished in December 2023. Your filing deadline was December 2024, right? So you had to have filed by end of last year. And if you've missed that deadline or you filed late, then you can't get that fine waived or reversed. I would still try and do it, right? Because, I would be arguing that the rule wasn't there, and if you'd known, you would have done it early. You might find that the FTA will say, sorry, too bad, you shouldn't have waited around to file your tax return, but it's still worth a shot. Okay, so if you opened in June 2023 and then you missed a filing deadline in 2024, December 2024, come and see us. You can probably try and appeal the fine. We don't know if you'll be if you'll be accepted or not, but still worth a shot. Again, this is just companies that opened within the month of June 2023. Okay, if you opened prior to June 2023, you're in that first bucket we spoke about. If you opened after June 2023, you're in one of the later buckets. Okay, so it's just those companies that were unlucky to open in June 2023. Okay, I'm just going to run through. All right, and just some other things about the waiver, right? So if you've already paid the fine, right, then you can get it refunded. So if you haven't paid if you haven't paid the fine yet, then so the fine is there, but you haven't paid it yet. Once you file your tax return, you can get it reversed. Okay, so it'll just be reversed on your Federal Tax Authority account. If you haven't registered yet, when you do go and register, you'll trigger the fine. Okay, but then as long as you'll receive the fine, but then as long as you file your return on time, then that fine will be reversed. Okay. And then obviously, if you have already paid the fine, you just need to go and make sure you file your tax return ahead of the deadline or the shortened deadline. And then what will happen is you'll get it credited back to your FTA account, and then you need to go and apply for the refund to your bank account. Okay. I've got some specific questions coming through now, so let's run through these. So the first one is, our due date for filing a return was 30th of June. The return is already filed around this date and the waiver came later. So according to the law that they've written, you don't get the waiver because you didn't file it ahead of, 2 months ahead of your deadline, right? But I would still be applying for this and just seeing if they'll grant it. Okay. Don't know how lucky we'll be, but we're still going to try. Still worth trying. Okay. There's one here. So Zane, your question is the same here. It doesn't sound quite right what you've written here. So question here saying first tax filing year was July 2023 to December 2023. That doesn't sound right. If it was June 23 to December 2023, I can understand why you would have had a filing requirement. Maybe just reach out to us. We can probably help you out with this just to check that you've got the financial periods correct. But if it was actually June to December 2023 and you missed that deadline, then it's unlikely you can get it waived, but still worth a try. There's a question here, if I've already paid the fine. Yes, so you need to go and obviously file, as mentioned, if you've already paid the fine, you need to go and file your return in time so that it gets reversed, and then you need to apply for it to be transferred to your bank account. Question here. So question around registration timing. So first year, when you open the company, you need to register within 90 days. Otherwise, you get that 10,000 dirham fine. You don't need to keep registering. So once you register, you're on the Federal Tax Authority system, right? So registration is a one-time thing, and then you need to file returns each year. Question here around DWTC. So if you're a DWTC company, you do, as you've realized, Raghav, in your question, you've got a different financial year. So if your financial year finished in April, what is that? Maybe we'll take that offline and just work it out. And you've also got a question around small business relief. We'll go through that. Okay. Oh, Zane, I've just seen that you've clarified it's June. Yeah. So you're, like I say, you're one of those unlucky ones. It's just how the law was written, and they've clarified that, if you did open your company was open in June 2023, that you had that extra filing. I'd still be trying to appeal that and just say, look, we were unlucky the way the law was written. If we'd known the waiver was there, we would have filed it early. And try that angle. Hopefully we can get it reversed. Okay. For those of you, I've seen a couple of Virtue Zone clients here, tax and accounting clients here. Yeah, don't worry. If you haven't been told that you've got a fine, then you don't have it. If you know that you have a fine, then absolutely don't worry. We're getting this filed well ahead of the deadline. Okay, and another question here, just a pretty straightforward one. So our company opened in June 2022. All right, so because that was prior to June 2023, so Assad, your company falls into this bucket, the top half of the slide that's on the screen right now. So because you opened prior to June 2023, your first tax period was 2024, Jan to December, and so you've got a September deadline, or July if you want to file if you want to waive the fine. Zane, do you want to, on the next slide, what I'm going to do is so there's a few questions here around getting, how to apply for the waiver if you've missed the deadline. Just jump on that QR code and book a session with one of the team, and just, they're aware of what needs to be done. Have a chat to them, and we'll try and get a waiver in for you. Because we're registered tax agents, we can sort of do it through an agency portal, which seems to be a little bit more effective. Okay. If you have any other questions around that waiver, pop them into that Q&A box. Okay. Sorry. Yeah, and I can come back to them later on. What I'm going to do now is I'm just going to run through the sort of normal exemptions, and the standard sort of assessment of whether or not you'll be paying tax. If you still have questions around the waiver that we haven't covered here, or you've got a very specific one, then just scan that QR code and jump on a free session with one of our team, and we can sort of go from there. Okay, so just a reminder on what every company needs to do. All right, so obviously you need to register. I think we've made it pretty clear. We've spent half an hour talking about the fines if you don't. The next things you have to do, obviously, keep proper accounting records, and everyone needs to file a tax return. Okay, so just a reminder that corporate tax is not like VAT. It's not like that. So VAT, you only have to file a return if for VAT, you only have to register if you go over a threshold, or if you're filing returns or whatever, right? Corporate tax is the opposite. Corporate tax, every company is automatically included. Okay, so you have to file a tax return, right? And you need to prove if you're not going to pay tax. You need to prove if you're under the threshold. Okay, think of it as like a opt-out, whereas VAT is opt-in. Okay, so with corporate tax, you can't just sit there and do nothing and assume that the tax authorities will know that you're under the threshold. Okay, it's the opposite. You've got to go and prove if you're under a threshold, or that you qualify for an exemption, or that you're under a taxable profit amount. Okay, and the way you prove that is by submitting accounting records as part of your tax return. What we mean by accounting requirements, so proper accounting, is the general accounting standards in force for corporate tax is IFRS, International Financial Reporting Standards. There are some lesser applications depending on the size of your business, but generally IFRS sort of underpins the whole system. This is the other area where there are significant fines for not complying. So if the FTA comes and audits you and they find that you have not done accounting to the correct standard, you immediately get a 10,000 dirham fine. And then if you can't fix it, and this is where it gets quite difficult, if you can't fix up and correct your records, you get a further 10,000 dirham fine. So really significant fines for not doing this. Okay. And when you look at the exemptions available, it's understandable that the tax authorities are quite strict on this, because what they are saying to you is you don't need an audit unless you're under certain criteria, right? You only have to submit these accounts to prove that you don't have to pay tax. But in return, the FTA asks that you are doing these accounts properly. Okay. I think it's pretty reasonable. They've got these generous exemptions, and all they're asking in return is just making sure that you've done the accounting properly, so they can trust that you do actually qualify for these exemptions. What exemptions are we talking about? Okay, so 3 sort of exemptions that you can talk about, okay, or 3 exemptions apply. Think of it as layers that you need to fall down through before you actually pay any tax. Okay, so we'll go through these relatively quickly. What we'll do is so the reason that we have these in this order is because the free zone exemption, qualifying free zone person, that exemption goes indefinitely. So there's no time limit on it as now. Whereas small business relief only runs until the end of next year. And if you've gone for small business relief instead of the free zone exemption, you have to sit out of the free zone exemption for 2 more years, or a total of 5 years outside the free zone exemption. So when I say, fall down through layers, we're going to talk about these exemptions in order of preference. Okay, so free zone exemption, right? I'm just going to jump through a little bit. So there are 2 ways that you can qualify for the free zone exemption. Okay. One is if you are only doing business, so all of your customers are UAE free zone companies, right? Then your revenue is what's called qualifying income. Okay, so if you only sell to other free zone companies, then that's qualifying income. Now, I don't have many clients like this. The ones that I do have got, one or two clients, and they might be the client might be a marketing consultant, and they've got they work for two companies, both in Media City or something like that, right? So it's very uncommon that larger businesses just operate within the free zones. Now, it doesn't have to be in the same free zone. You can go free zone to free zone. Think of the UAE free zones as like a bubble or a layer, like I've shown here. And if you just exist within the free zones in terms of your customers, then you can qualify for that free zone exemption. Now, if you go outside of the free zone, okay, you can still get the exemption if you are doing what is called a qualifying activity. Okay, so inside the free zone, you can be doing anything, right? As long as your customers are all free zone companies. If you go outside the free zone, you have to be doing a qualifying activity. Now, the qualifying activities are very much heavy industry based. Things like shipping, manufacturing, processing of goods, very UAE industry, so aircraft leasing, things like that, right? Generally speaking, service industries or service activities are not included unless you are doing logistics. And when I say logistics, I mean you are actually providing, for example, services for cargo shipping. Right, it doesn't include courier services. It it has to be actual genuine logistics. So arranging shipping of goods for clients. Okay. There is one additional qualifying activity which applies just for designated zones. Okay, so if you are in a designated free zone, you have one extra qualifying activity, which is trading of goods. So if you are trading any kinds of goods and you are registered in a designated zone, which is a special type of free zone, for example, JAFZA is a designated zone, DAFZA, Dubai Airport Free Zone, is designated. Certain areas of RACERS are designated, right? But most of the free zones around Dubai are not designated. But if you are in a designated zone, you can get that exemption if you're buying and selling goods. There are a couple of other rules that apply to it, but that's sort of the main thing. Okay. There are a couple of other criteria that you need to meet to get that free zone exemption. So for example, you need to show adequate substance in the free zone. What that means is you probably need to have an employee or employees. You need to show that you're actually running the business from that free zone. And you also need to do an audit, but that's pretty stress-free these days. So free zone exemption, you're either operating within the free zone bubble or you're doing a qualifying activity and you've got adequate substance in the free zone. Now, small business relief. Okay, so small business relief, so let's say that you don't meet the criteria for the free zone exemption. Let's say you're providing marketing services to a company overseas. Okay, so that won't qualify as a free zone exemption, but you can still go for small business relief. So small business relief, if your revenue is less than your annual revenue, so annual turnover, annual top line sales, that is less than 3 million dirhams, great, you don't have to pay tax. You still need to go through all of the compliance steps. So obviously you need to register, you need to file a tax return, and you need to, the most important thing is you need to have proper accounting done, because you need to show that you have accurately accounted for your revenue and that it is under the threshold. Okay, your revenue is under the threshold, great, you file your tax return, no tax to pay. That exemption is available for your 2024 tax year, for your 25 tax year, and 26. It's 3 million that resets each year, but then it goes away in 2027. Now, if you don't meet the criteria for the free zone exemption and your revenue is over 3 million, right? That is when you become a taxable business and the FTA stops looking at your revenue and starts looking at your profit. Okay, so profit is revenue less expenses, right? So your net income, your profit after expenses. And this is where the tax-free threshold comes in. So if your profit is less than 375,000 dirhams, you pay no tax. But every dirham over 375,000, you pay 9%. Okay. Now, just a reminder, you only get to that point if your revenue is over 3 million dirhams, right? If your revenue is less than 3 million dirhams, you don't pay tax regardless of how high your profit is. Okay. So you could have 3 million of revenue, sorry, call it 2.9 million of revenue and 2.5 million of profit, and you don't pay any tax. Okay. But if you had 3.5 million of revenue and only 1 million of profit, you'd be paying tax because your revenue is over 3 million and your profit's over 375. But you have to have revenue of more than 3 million before they look at your profit to tax. Any questions around small business relief? Please pop them on. We're just going to quickly cover a couple of other things that have been coming up a lot. Sorry, I'm jumping around a little bit. Sorry, I'm just going to go back to a couple of slides back here. Last thing I wanted to cover was business closure. Now, this is a very common one that I'm getting around, people who are restructuring, closing down a business, or, some people moving out of the UAE, moving out of Dubai, sick of the traffic. So the UAE is now the same as every other country, right? Where closing down the business, right? Tax closure is now the hardest part of closing down a business, which is the same it is everywhere else in the world. If you've ever closed down or shut down a business just across the border in Oman, right? Getting your tax clearance when you close the business or close the company is the hardest part. All right. So obviously the easy part, still you need to deregister with the free zone. You need to, get your sort of compliance closure from the free zone. But then what you need to do is you still need to be registered for corporate tax. You need to file any outstanding tax returns, and then you need to file a tax return which covers you up until the closure date. Okay. Once you've done that, then can you deregister for corporate tax and then close off, the FTA portal. We have lots of clients who just refused to believe that. So I had clients who had closed their business on, I think it was the 10th of January, 2024, and the FTA fined them for, we tried to convince them, they refused to believe it, and the FTA fined them for not filing their tax return and not deregistering for corporate tax. They also never registered for corporate tax, so they ended up with around 25,000 dirhams in fines because they just refused to believe that, tax was really here. So, and all they had to do was file a nil return for a 2-week period for the first 2 weeks of January. So please don't ignore the tax filing or the tax closure if you're closing your business, because this is where the fines can really get you, and they really rack up really quickly. Okay, so look, we'll finish there. Like I said, if you have any questions around the around that waiver, please get in touch. I've got the QR code on the screen right now. Sorry, just one quick question I had here from Helena. So small business relief, you don't need to do the adequate substance. That's just for the free zone exemption. And audits, so you only need to get in, for tax purposes, you only need to get an audit if your revenue is over 50 million dirhams, that's 50, or if you are going for that free zone exemption, you also need to get an audit. You don't need to get an audit for small business relief. right? Most companies, most smaller companies do not need to get an audit because they're under the revenue threshold of 50 million and they're not going for that free zone exemption. Okay. Akhtar had a question around beneficial ownership in the free zone. Akhtar, that's a bit of a complex one. Maybe jump on a call with us and we can help you out. Okay, I think we've covered all of the questions. Nukila, don't worry, we've got your tax return covered. You're a client of ours, that's fine. Great. So yeah, any other questions? Jump on that QR code. We'd love to help you out and have a chat. Please, if you've received that fine, don't miss the deadline to get it waived. Don't wait until 25th of July to get onto it. Please just get onto it now so that if we're doing it for you, we need the time to file. If you haven't come to us yet, yeah, please don't wait. All right, thanks everyone, and we will see you all in the next webinar. Which if the FTA makes any other announcements in the next little while, we'll schedule another one. Otherwise, we'll probably do one as we get closer to the filing deadline. Thanks a lot, and have a lovely Thursday.